Hi there, welcome to another episode of WuBlockchain podcast. Today, I'm thrilled to have Pierre, who was a former member of the French Parliament and a founder of the Stablecoin project, Usual. Hey, Pierre, how are you doing today? Thanks for coming.
Hey, Shang, thank you for inviting me. And yeah, I'm good, thanks. And you?
I'm doing well. So for the audience who aren't familiar with your background, could you please share us more about your experience in the political space and what problem is the Stablecoin project Usual solving?
Yeah. So, I'm a former lawyer, and I have met the French president 10 years ago, and I decided to become his political advisor. After that, I have been elected as a member of parliament, and as a member of parliament, I work a lot on crypto regulations. I drafted in 2017, 2018 the first legal framework about crypto in France and also in Europe. And the idea was to create a setup that attract capitals and entrepreneurs to create something that offer also some security for entrepreneurs in crypto. And so, yeah, during 5 years, I was dedicated to that. I was also the vice president of the presidential party during 3 years. And in 2022, I have decided to quit politics just to come back to a normal life. I don't know if we can say that leading a startup in crypto is a normal life, but yeah, I decided to quit politics and to come back to the private sector. And I have created Usual with some friends. So Usual is a real-world asset stablecoin that aim also to decentralize Tether and Circle to have a better stablecoin in terms of collateral, transparency, but also to offer the possibility to share the ownership of the issuer. So the idea was to create something that is new, not based on Europe essentially, but just a global product that that can continue to spread stablecoin, because I think stablecoin is the most interesting innovation in crypto for the moment after Bitcoin. But yeah, stablecoin are I think a great tool for democratizing bank services and so on, and offer people a real sovereignty on their wealth and capitals.
Awesome. I think for the podcast, we can kind of divide into two parts. I think the first part can be spent on sharing your opinions, and obviously you don't get to talk to a former politician from the Europe side. So I think it would be great to kind of just have a conversation on the regulation side and what do you think we're going, especially with the progress being made in Europe. And the second half could be on the interesting aspects of Usual.
Sure.
So yeah, I think my first question is, obviously you focus a lot on the crypto regulation side and in the government. What is the crypto adoption look like in France or in Europe in general compared to the rest of the world?
Very good question. So there is different state of the crypto regulation. Before 2022, it was national regulatory setup. So the Europe was not competent, and so it's why various state member in Europe create their own regulatory setup. But in order to uniform the market and to have a market that is just Europe with the same rules, and to be able also to passport, so that means that you can have an agreement and a license in one country and just offer you services in other European country. So Europe decided to create one unique regulation that is called MiCA. So MiCA is about virtual asset services provider. So it gives license to these actors, so like centralized exchange, brokers, market makers, and so on. And you have also a part on stablecoin. So you have two parts. And the idea of MiCA, like I said, is to offer a clear setup about crypto regulation. This is not about security asset or something like that. It's just mainly focused on the ones that are issuing some utility token governance token, and also stablecoin. So I think it's a good thing. After that, there is some uncertainties for the moment. And really, a part of the crypto regulation in Europe was a copy paste of what have been built in France by my team, also by the regulator, early 2027, 2017, sorry, and 2018. And yeah, so for the moment, we will see how it is, how it's entry in force. So we will see how it's applied. But I think it's good in certain sense because we will uniform the market. And in other sense, also we need to continue to take an advantage. So crypto is well seen in Europe. We are, I think, a little bit behind than US or Asia because there is a lot of people that are using crypto, but for the moment, banks are very solid in Europe, and so they are making a good lobbying to avoid crypto regulation. So it's difficult sometimes to create the market, but clearly, yeah, crypto is going well. We have good initiative from politicians, and we continue to educate politician actors to be sure that they understand the power of this technology and what is the purpose and what we can do with that. And so that is, I think, the most important point. Continue to educate political actor to let them take the good path and the good decision.
Got it. I think in earlier 2019, there was some big news. The one I remember, correct me if I'm wrong, of course, was Binance was trying to set up a headquarters in Frankfurt, if I remember correctly. And I don't think a lot of news have, a lot of news around Europe developments have surfaced since then. I think maybe just because the US side are kind of, grabbing eyeballs. Or maybe we're just overlooking the progress being made in Europe. If we can perhaps I guess my question is, do you think Europe is advancing? The progress being made compared to I guess like back then?
Yeah, the problem with Europe, it's sometimes we over-regulate and we regulate foreign companies. So we attract companies that are foreigners, and we regulate them. I think it's better to create a business and to help, teams to develop their own company in Europe, and after that, trying to regulate. So you're right. Sometimes the focus is on US mainly, but we have seen since, let's say, 2019, 2020, a lot of company in Asia like Binance, some US company installing their headquarter in France. It is the case from Binance. So Binance with CZ were expanding in France. They had installed their local headquarter in France for Europe. It was also the case for Circle. Maybe Circle will continue to install the headquarter in Europe in France. So France is the most advanced country in Europe about crypto. We have some of the biggest actors of Europe, like decentralized actors like Angle Protocol, Morpho Protocol, Mangrove. We have some good actors in the DeFi space, and we will continue to build that. But for having this kind of possibility, you need to have a regulatory setup that is clear and that offers security for entrepreneurs. For some people that want to install their activities, or some people that want to create them. So this is the main concern for myself, to be sure that MiCA will be enough clear to create this security for entrepreneurs in Europe.
Is there any so after Binance news? I think they're just like kind of moving to Dubai nowadays, or like do you think like France is still or Europe in general is still kind of, at least they want to attract this global, crypto like monster companies.
Yeah, I think you have two movements. In 2020, a lot of companies were interested to set up the headquarters in Europe, and after that, they struggle a little bit with the rules and the license. We have seen Binance had some difficulties to obtain some license in Netherlands, I think in other country in Europe also, and so it was difficult, and a part of the team, come back to Dubai. But Binance is fully remote. It's very much decentralized in many countries. So if they want to continue to offer some services in Europe, they will need to have a license in a European country. So the question is, which one? Which country will be the most advanced in Europe with MiCA setup to offer some regulatory license? So for the moment, it's not very clear. I think France has already a supervisor that is well aware about crypto. So it's called the AMF. So this authority is leading, I think, the crypto regulation. So they know very well how crypto works and so on. So it will help also France to have some velocity in order to distribute some license for crypto companies. But really, for the moment, the main problem is not really about virtual asset services provider. I think the new rules are a little bit tougher than the old one. But really, the uncertainty is about stablecoin. Clearly, stablecoin was not the most favorite things from with ECB, so the central bank. MiCA has been built also to fight a little bit against stablecoin because central bankers are scared about the systemic risks of stablecoin. They are scared also to be challenged on their monetary sovereignty. So the main point is to explain that stablecoin is a new form of commercial money, and not just something that will fight against the monetary sovereignty of central bank. And so it was difficult to educate, I think, MEP, so member of the European Parliament, because sometimes, they are scared that this new object are a new tool to destroy European sovereignty. And I think it is the inverse. We need to have good stablecoin in Europe, not only European one. We need to regulate them to protect investors, like everywhere. But clearly, we need to defend a model where stablecoin is a new form of money, and for that, we need to allow people to create their stablecoin with some strict rules. But to also because I think it defends the monetary sovereignty.
Where do you think the pressure of advancing crypto development coming from? Because if we take a look at United States, it's probably because of the elections, right? So Donald Trump, their followers are kind of like pro crypto, and I think it's working that they're using crypto as a way to win votes. Most voters, they are proactive and they have opinion to share, and chances are they also hold crypto. So I think there's some like high correlation over there, and Joe Biden saw that, and he begins to feel crypto more friendly as well. So do you think that kind of similar pressure is applying to Europe or France as well?
Yeah, you're totally right. I think so. I think politicians discovered that crypto is a big lobby, not in terms of industry, but because it's community. Crypto is about community, and a lot of young people, and not just young people, are using crypto in US, and so they discovered that, let's say, 30% of the population is exposed to crypto, and so it has a good impact on the vote. So clearly, what is a little bit disappointing in my opinion is that since 4 years with Biden, we have seen a lot of attacks against crypto that were political attacks, and that were not funded by good arguments, And so I think it was very tough for US citizens, US entrepreneurs to create a business in US with this uncertainty. And so I think it's good if Biden and Trump just clarify their position on crypto and just stop to do crypto entrepreneurs as an enemy of US. After that, in Europe, it's also a debate, but clearly it's not a conflictual debate like in US. I think there is less people that have crypto. In France, we expect that there is between 10 and 15% of the citizens that have crypto. So it's good. It's less than in US or less in Asia, but clearly it's expanding. And crypto is not a political subject for the moment. I was called the crypto MP, and because I was the only one that was working on this subject, and so there is no real understanding about crypto in Parliament, in national parliament in France, also in European Parliament, and this is a problem because to understand the technology if you want to regulate the technology, and you cannot just copy paste a regulatory framework that apply to central entities like banks and just copy paste it to apply to crypto. This cannot work, and we have seen that many politicians have the temptation to just copy paste old regulation to crypto that are sometimes fully decentralized and doesn't work like previous model. So clearly, I think education is mostly important. So there is no fight in Europe about pro and cons, but it's mainly not it's about understanding what is the technology and what is the purpose. Because I think people understand very well when they don't have a bank, they don't rely on a very strong banking system. So people understand clearly what is the value proposition of crypto. But when you are in a system that is working well, people just ask, okay, why I have to leave my bank if I can make a wire that takes just 10 minutes, And so clearly it will take some time to expand that crypto is not just about efficiency. It's also about individual sovereignty, the capacity to own and hold its own asset. And so, it's a matter of education, also democratization. I think we can speak a little bit about that, about UX and how we can spread crypto, because for the moment it's too complicated for people that are far from new technology.
Yeah. How do you generalize the I guess an average profile of a crypto user in Europe? I find it interesting because if I asked an average person in, let's say, like Asian markets like China, people will probably more focus on making a quick buck, right? That they're more focused on the financialized or the wealth aspect of crypto. And perhaps in the US, people are kind of more into the culture or the value behind decentralization and self-sovereignty. How do you describe, if you could, right, like how Europe users view crypto?
It's a difficult point. I think mostly young men. I think mostly young men between 25 and 35. So the first internet generation, I think. There is also some younger people, but it's mainly men. And after that, it's people that are educated to investment. The problem in Europe, it's a problem and also a good thing in certain sense, is that a lot of your economical life is handled by the state. If you want to prepare your retreat, your pension, all is doing by the state. The state You just put money every month, and at the end you have a pension. So people doesn't think about what will be the future, what will be my investment to have some money to live after the end of my professional life. So people are not investing a lot in Europe. This is the main problem. Also, it's a problem because it have impact because you don't have a big hedge fund that are financing the innovation. Sometimes we struggle a little bit against American or Asian because they have most power in terms of money to finance innovation, because this money is from pension, and in Europe it's mainly the state that is handling this subject. So clearly, it's why we are a little bit behind. And the guys that have crypto is mostly someone that is aware of and have some financial culture, because they understand what is important to invest in the whole life, and not just invest in your flat or something like that, but just invest also in some financial product. And so clearly, I think it's mostly about investment. There is also some speculation, but clearly it's mainly investors and long-term investors that are the main target in Europe. If we focus on the ones that have adopted crypto since, let's say, 5 years.
Makes sense. Why do you think people are like US dollar stablecoins is dominating the market? I think if you take a look at like the global like foreign market, like euro is a huge part of the financial system. But why do you think that in crypto we haven't seen any other stable coins other than like US dollar?
Yeah, it's a really good question. You're right. 30% I think of the forex exchange is in euro. So normally it should be the same in crypto. But since the beginning, we haven't got any huge euro stablecoin issuer. So I don't know what it is the cause. It is a consequence, but clearly there is one thing, that there is no huge euro stablecoin, and also there is not a lot of demand. Not a lot of demand because I think US market since 2018, 2019, and the birth of fiat-backed stablecoin like Tether and Circle are just taking the world part of the market, and so people in crypto are used to exchanging USD, and so they see BTC ETH in USD. So this is their I'm a European, but I don't know. I really don't see the BTC price in euro. I don't see it. I'm just focused on the USD price because it's my mental reference, and so I think people are used to. And the other thing is that because we are a little bit late in terms of institutional democratization, I think there is less hedge fund, TradFi actors that are in crypto in Europe. There is less demand on Euro stablecoin, because Euro stablecoin is also a matter to protect yourself against the volatility if you are a European actor. And as there is a lack of European actors and European institution, there is a lot of European citizens, so retails, but not institution. So there is less demand on euro, and I think euro will grow if there is some companies that want to hedge their treasury in euro. I think it will be the case also if some crypto hedge fund, some VC, and so on will continue to invest in crypto, so they leave TradFi to be focused on be exposed to DeFi, and so I think it will be rebalanced on the long term, but not for the moment. And so USD is the main currency to exchange all over the world, and so it's why I think for the moment they have the majority of the market. But I think every country and every big currency that are in TradFi will also have their own part in crypto if crypto become the new layer of financial services. So I'm not scared about that, but yeah, clearly for the moment there is an unbalance equilibrium between the whole currency market.
Yeah, I feel like once people get used to one currency, like if it's USD denominated, then because like the crypto volatility are so high already, like people don't really have the demand for Euro stablecoin unless they want to use it for I guess payment or other real use cases. So I think that led us to the second part of the podcast, which is your new project usual. I found it really, really novel, especially the tokenomics. Can you just perhaps like give us a walkthrough of how you started this project and a quick walkthrough of how does it work?
Sure. So we started in 2022, and the purpose of Usual is that we have seen that centralized fiat-backed stablecoin will make a lot of money also because of the growth of the interest rate. So in 2022, it was after COVID sequence, and the rate was starting to grow. And we have seen that this model will make and generate a lot of money. And this is the case because, a company like Tether is making 4 billion last quarter, 6 last year. And so with 40 employees, it is the most profitable company in crypto, but not just in crypto, also in the TradFi world. So it's very efficient and so on. It's efficient because they just privatize the profit of the user. In certain sense, when you have USDT or USDC, you are not paying anything like fees and so on, but you are giving all the interest to Tether shareholder or Circle shareholders. So it was a problem for me because I think we can invent a better model where there is a full alignment with the user as a community and the stablecoin issuer. And clearly, making a decentralized stablecoin is not just to make a crypto-backed stablecoin. It's also how you distribute the value, how you distribute the revenue generated by the stablecoin issuer. So for me, it was about two things. The first thing was to create a stablecoin that is better in terms of collateral. And we have seen with SVB, so the bankruptcy of the Silicon Valley Bank, that crypto stablecoin, fiat-backed stablecoin are exposed to the bankruptcy failure of the whole system. And so this can impact a lot DeFi user. So the problem in this case is that we really wanted to create a stablecoin that is safer, not exposed to a commercial bank, not exposed to fractional reserve risk, and one backed with a very short-term treasury bill. So something that is on top of commercial money, not central money, but on top of commercial money. Because if you back your stablecoin by something that is very short-term treasury bill, you have something that is just linked to the only risk is a US default, and the US default can exist, but it's minimal. And if US default, after that, there is no banking system. So clearly, you are more protected if you have this kind of collateral. The second thing is how we distribute the value generated by the user. I think it's totally unfair to have a system where all the value generated is confiscated for a few number of people. And this is the case with Tether and Circle. And I think they act like traditional bank that privatize the profit and socialize the losses. If something happen, this is a stablecoin holder that will pay the difference because the stablecoin will depeg, and all the revenue generated are in the end of the centralized entity. And so the question was how we distribute this value generated. And we take another approach than just the normal approach that is distributing the yield that is generated by the collateral. Because really, we wanted to align the early entrants in the model. We wanted to create a model that distributes the power and the rights on the governance of the protocol through a token that is a governance token that can allow you to be exposed to the growth of the protocol. So clearly, it's a really different approach where you will be exposed to the success. If usual achieve to take a part of the market, to achieve to be as big as Tether, as an early entrant, you will have a big part of the benefit. And so because you are a believer and you help the decentralized protocol to grow and so on, bringing some value. So it's a transfer of privatized wealth to the user, and I think it's corresponding to the Web3 ethos, where we want people and community to help the growth of a new project and want to decentralize and redistribute the value generated by the project to the user and the community.
Yeah. I think for most users, including myself, I'm definitely more interested in the second part, like the distribution of profit. Because obviously we've seen there's so much money being made from just holding the treasuries of from Tether and Circle, and it'll be really, I think we were kind of one of a kind if a stablecoin project currently, right, to distribute this in a way of a governance token, because you can also multiply that interest you're earning from the treasuries. But I guess the question from that part is interest rate fluctuates, and we are kind of seeing the Fed is going to cutting their interest rates this year. How do you ensure the growth of the or I guess a kind of diversifying, right? The diversification of the profits usual will generate in the future, as you know, you kind of tops out in TVL. If you want to have a higher value of the governance token, ultimately you want to show growth in the earning. And if the case where the U.S. interest rate tops this year, then you kind of have to find an alternative or higher profits way to use that treasury. I'm not if it's maybe it's too early, but we'll have to hear your thoughts on that.
No, it's not too early. You're right. I think we will stay in a high rate environment. I think rates will decrease a little bit, but they will stabilize. I think around 3.5, something like that. So the revenue of the protocol is totally linked for the moment only with the yield of the real world asset behind. And so we are distributing a governance token that is disinflationary. So the more early you enter, the more governance token you obtain. So you have a share that is more important at the beginning of the protocol if you are an early entrant. After that, the idea is to have revenue that is consequent to be sure that, like you said, the value of the generated by the protocol and also the price of the governance token is sustainable. And so it's why it's just in between. We need to be sure that every time the collateral is safe. And this is very important. We cannot invest in some bad bonds where you have not the trust of, and these bonds can make default, because after that we are under collateralized. So it's very important for us to be collateralized only with some A-grade debt mechanism if we want to protect the stablecoin issuer and the stablecoin holder. I think this is very important because we have seen on the crypto market there is a lot of PTSD with stablecoin that cannot hold their peg, like Luna and so on. And really, I think the first thing of stablecoin is to be sure that there is no risk on your capital. no risk on your principal. You can use a stablecoin to make investment, to make some loops and yield and so on. This is also an object, the aim of a stablecoin in crypto and DeFi space. But we really wanted to have something that is trustable, transparent, and very sure in term of principle. You can ever redeem one with the collateral. So if you want to expand your prudential policy to other assets that will have a better yield than the risk-free yield, you need to be sure that the new backing asset will be very solid. So it can be bank, corporate bonds, or various, A-grade bonds from some companies that are very solid. But after that, you need to stay very very strict on your risk policy. So the idea of Usual is to have a layer of liquidity that will be the stablecoin, but we can replicate also the model of Usual with various other assets. We are not just a stablecoin issuer at the end. We are just wrapping an asset that is productive, and we're giving to people a speculative layer on top of that through the governance token. For people that are most advanced in crypto, it's like you issue a synthetic. When you lock your synthetic, you obtain a yield in the usual form, so in the usual governance token, that represents the future cash flow of the protocol. And at least you can claim the native yield of the product. So we can do that also with StakeDiff, We can take StakeDiff, issue a synthetic of StakeDiff, and having a yield in Usual on top of this StakeDiff product. And at least if the yield is not enough in terms of speculative yield, you can claim the native yield. So it's like a convertible yield. So it offers the security of your principal. Whenever you want, the synthetic issued by Usual can be redeemed 1-1 with the underlying, but the yield that is given in shares of the protocol, in part of the protocol, that offer you a governance right, and you can claim if the yield is less important, you can claim the risk-free form or the native yield of the underlying. So we can generalize that with various other assets. It's why we are a product that is working in bear market and also in bull market. In bear market, because we rely on also TradFi investment. And so we have a base layer of TradFi investment in the treasury. But also we can rely on bull market with the fact that people are more bullish on a governance token, and that increase also the yield that is given to people. So we can work in both environment, and that is very important. After that, the last thing is that after creating this layer of liquidity, it's also a matter of services. And when you are creating a stablecoin or various other synthetic, like you are a decentralized decentralized banking infrastructure, you can also offer various services like payment, like financial services. On top of that, that also creates some fees that are going in the Usual. So Usual is a representation of all the revenue generated by the protocol. It's also a utility token because you can bribe through Usual. You can select new synthetic, maybe another synthetic that is not a synthetic of a real world asset like the stablecoin USD0, but a StakeDiff synthetic that will be ETH0. And you can also create some services on top of that are generating yield that is drive to the Usual token that govern all the revenue generated by the protocol.
That is so interesting. What is your current focus? Just you kind of mentioned there the traditional route of the stablecoin and the DeFi, like DeGen route of launching a stablecoin. How are you focusing on kind of, I guess, the effort between these two markets?
Yeah, I think first if you want to create and to develop a stablecoin, the only metric is TVL. TVL is very important because it's allow you to be listed. It's allow you to spread the liquidity in various networks. And so to incentivize TVL, you need to offer also a good innovation to people. And so it's why we have created another model that is redistribute the value generated, by Tether and Circle to the user. And this is the first element of usual. Tether is valuated, I think, around more than 100 billions, and these 100 billions need to be redistributed to the user. So TVL is very important, and for that we have created this mechanism to redistribute the power and the governance right. After that, we need to spread, and the stablecoin at the end is a mean of payment or trading counterparties. But for that, we need to create this systemic layer in terms of TVL to be sure that we will be everywhere on various chains and so on. We are starting mostly in DeFi first, because clearly there is a demand for a stablecoin that is not fiat backed, that is transparent, and that will be owned by all the users of this stablecoin. So if DeFi protocols integrate us, they can have a share also of the stablecoin issuer and so on. Not just a share of the revenue, but a share of the value generated by the protocol and the governance right. And so the idea is to spread over DeFi, spread over various layer 2, and to be sure to be everywhere in the DeFi ecosystem. After that, the second step is mostly focused on CeFi to allow listing of the stablecoin, also the governance token, and after that, creating some services on top of that is mostly dedicated to payment or banking services. And so clearly, for myself, I think DeFi is the most important point. We have seen with Etina that you can scale on DeFi. You can scale to a few billions in DeFi. And firstly, DeFi understand very well how this kind of mechanism works and what is the value proposition. So clearly, it's not an institutional product for the moment. It's mostly a DeFi product that will give a new way to distribute the value to people. But in the long term, we will expand on various other services that will allow us to be a real stablecoin, because at the end, a stablecoin is a mean of payment like Circle, like PayPal, like Tether, and also a trading counterparties, because it need to be used also as a collateral on various financial services and like exchanges.
Yeah, how do you plan on using the treasury? Are you going to invest it, or as a governance token? How do the governors, right, the holders of the token, get to decide, how do you spending
You're
the
right.
treasury?
So usual holders, the treasury belongs to usual holders, and so they will decide what will be done with the treasury. It's not to me to decide, what will be made with the treasury. I have some ideas, and we will have some proposal for usual holders. So it will be maybe investment in some other product to extract over some performance on this treasury. It will be maybe buyback and burn. I don't know yet.
Mm-hmm.
So it will be decided by the governance. But clearly, the idea was not to distribute directly the yield, but distribute the power to decide on the actual revenue and the future revenue of the protocol. So you don't earn an instant yield, you earn the possibility to control the issuer on the long term. And if this issuer achieves to be as huge as Tether is, you are a great winner to be the first one to provide liquidity and use the protocol.
Yeah, totally. Because I think attracting TVL is definitely important, but perhaps is just the beginning of a sustainable, healthy protocol, because they're like pump and dumpers. People who just come and farm tokens, and once the TGE happens, they just leave and choose and go for a newer farm that has a higher yield. What do you think about that meta? Like how is it a possible way to kind of like make them stay, or what do you have in plan for in that
Yeah,
scenario?
it's a part of the game. Some people are very short-termist. They just decide to dump their yield, their airdrop directly. After that, it's also mainly because a lot of governance token have no real value behind. And really, I think it's because people don't trust the real value of the governance token, they dump it. And if your model is based on a system where you can have the possibility to have something that is very valuable because it represents through the tokenomics something that has a real value. So I think people can handle and hold the governance token. And so the idea behind Usual is to have a governance token that have a real value, and also that will incentivize people to use the governance token to keep it to generate it more value on the long term. So really, it's a nice equilibrium between uh, short-term people that will just sell directly, put selling pressure on the governance token, and some long-term holders that will be incentivized to hold their governance token and also be exposed to the growth of the protocol. So you're totally right. You need to find in your tokenomics some good equilibrium. And sometimes a lot of governance tokens are not well balanced to avoid this kind of selling pressure because you have no real value that are just wrapped in the governance token. So it's just a governance right, but you cannot control something. There is no treasury. There is no revenue that have been made by the protocol and so on. So clearly, all the idea was something that is quite different in terms of structuration and that offer the possibility for the user and long-term user to not be diluted also by some insiders. This is very important because we have seen a lot of projects where people are diluted by teams, by VC, and so on. Frankly, I don't love this kind of mechanism because it's not pump and dump, but you are just selling to retails something where you are an insider. And I think it's not good for the democratization of crypto because you need to have rules that are transparent. And so in Usual, 90% of the governance token will be distributed to the community, to the protocol, and only 10% will be distributed to teams, investors, advisors, and so on. And this is very important. And there will be never more than 10% of the circulating supply that will be distributed to those guys in order to protect the community, to be sure that we are fully transparent on how the system is controlled, how the system and the value generated is distributed.
Yeah, you're absolutely right. Because another thing I want to add is you can also easily fork a similar product, and you call it a new farm. Just like back in DeFi summer, there's so many new forks. I'm not sure if it's too early to ask, but what are the if you finish with any of the ideas that that can, as you said, attract more long-term holders and kind of like prevent this imbalance between short-term and long-term like holder population.
How we do that? Sorry
Yeah, if you can share.
Yeah, but firstly, you need to create a community that believe in your project and believe also in the capacity of this new stablecoin to attract liquidity, to make revenue, to generate more revenue through new services on the long term. So this is very important. You need to have believers, like you have also in the other market, like you have with Bitcoin and so on. So believers and community are very important to be sure to have a substantial growth. And after that, yeah, I have seen a lot of game with FGV at the beginning, with some very low circulating supply and so on. Clearly, this is working during, let's say, 6 months. But after that, when there is a bear market, no revenue generated, no value holding the governance token, the value and the FTV is just crushed. So really, the idea is to to be fair and to be transparent on how the value is generated, how it is redistributed through the governance holders, and having a model where owning the governance token has you give the possibility to give advantage to the holder on the long term. So have a game theory that between someone that is selling directly their yield from the governance token in, let's say, USDT or USDC, and someone that is holding the governance token because he believes that the real value for the protocol is on the long-term vision, clearly will incentivize people that have long-term vision. And so really it's just how you think tokenomics. And a part of, I will not totally explain the model before the TGE, but the idea is to have a system where if you stack your usual, you will have more rights than someone that is just selling the usual directly. And so you can obtain yield stacking the usual that is also a yield that reward people that trust in the model on the long term. So you will see I think usual is an innovation in terms of tokenomics because it's an elegant game theory equilibrium between long-term holders, short-term holders, and people that will also see their own advantage depending of what they want in the market, but without destroying the value generated by the protocol on the long term, to be sure that we have some sustainable tokenomics for the long-term holders.
Yeah, definitely. I definitely agree with that. How do you? I think obviously you're not the only person or the only team that figures how much money Tether and Circle are making, and a lot of newer stablecoin projects are hitting the headlines nowadays. What are the, I guess, differentiators Usual has compared to this new meta of stablecoin projects, or if there is I guess one aspect that you guys want to focus on, or you guys have an edge than others?
The main difference of Usual with all the other, and I haven't seen any mechanism like that for the moment, like us, is that you have one thing. Tether is distributing nothing. You have some stablecoin issuers that are distributing the yield generated, and we are a third one that distributes the value. And the value is how the market see the future of the protocol. So it's a speculative vision on top of a real world asset stablecoin. So the idea is not to make 5% through the underlying yield, is to have something that will have more value on the future and that can be priced like it is. So through the governance token, you have actual cash flow and future cash flow. And so this mechanism is have been invented to incentivize early entrance. If you are entering in some protocol, let's say Mountain Protocol, you have a yield, and really this product is good. I think it will be the base layer of the DeFi liquidity on the long term. Stablecoins that are rebasing and so on. But let's say Mountain Protocol scales to 10 billions, 100 billions, and so on. You always have a stablecoin that yield 5% and worth $1. You have no exposure to the growth of the protocol. You have no exposure to the scale of the protocol. And so the idea of Usual was not to redistribute the revenue, but to redistribute the value generated on the long term by the protocol. This is the main difference with all the stablecoin issuer.
Well, what is the value then? Like you mentioned payments, and you are a former politician. What are you brewing on that side?
Yeah, mainly focused on managing the company, regulatory setup, ensuring that people can rely on the best collateral to be sure that this product is safe. And yeah, after that, I work a lot with the teams to manage new system, to innovate, to continue to think about new model that can be interesting for DeFi. We are reinventing a lot VE tokenomics, where you lock on 4 years and so on. We are trying to create new model where you incentivize people according the price of the token and so on. So creating new tokenomics that engage on the long-term people and create more alignment between the various persona that hold a governance token. So clearly, I'm on various things, but it's an exciting journey because we have a lot of things to do, and clearly have a lot of innovation um, programmed, and so it's very very exciting to think what we can do in the next year, just after the launch of the governance token that will happen in Q4 2024, so in less than 5 months.
Yeah, much looking forward to that. And after TG, you mentioned the payments, right? Like, because at the end of the day, I think stablecoin must have its own use case. I think one thing Ethena done really well is a lot of the exchanges are accepting USD as a collateral, and that kind of prevent people from just gambling on yield, and that kind of create a higher yield for the stake USD as well. What do you think about for usual the future plans on making the stablecoin serving the true use cases of stablecoin?
Yeah, so like I said, I think a stablecoin is a mean of payments. So you need to integrate some services, payment services. You need also to be listed on CeFi exchanges. So we are working close to actors like PayPal, also some market makers and exchanges to be listed on their platform, and this will happen before the TGE of the governance token. We are making a pre-launch phase during 4 months where people can farm the liquidity, increase the TVL. This will happen at the end of June, so it will be released for everyone at the end of June with a referral program and a point system. And the idea is to be totally transparent on the roadmap of the protocol. After that, after the TGE, creating some new services like payment dApp chain. So a dApp chain that will be totally focused on payment, where usual token can be also the asset that is used to validate the transaction and so on. We create also another layer of services on top of the liquidity. So it's not just the liquidity is productive, where we offer a stablecoin that is totally composable in DeFi with a yield that is given in usual. It's also that we will offer some services, and especially some dApp chain that will be focused on instant payment for using the stablecoin and also bridging with other stablecoin, because I think we can make a good partnership with PayPal on the long term, as they are directly connected to a lot of retail merchants and so on. And I think we need to use also their infrastructure and their distribution network to be a part of this bridge, because at the end, a stablecoin is an investment product and also a mean of payment. So you need to have the possibility to bridge in the real life your stablecoin with the real life, to be able to pay some services, some communities in the real life.
Interesting. Isn't like PayPal USD kind of a competitor to usual, or is there a way you can work together?
I don't think so. I think they are mostly structured like Circle and Tether in certain sense. So yeah, we are offering a system that is quite different, and they will bridge a part of their centralized model that is PayPal with something that is bridging crypto to their actual payment services. But I don't see them like competitors. I think also for the moment, stablecoin is 150 market cap or something like that. So 150 billions of market cap. I
Yeah, it's
think
huge.
in the long term, it will be trillions. So,
Yeah.
I think all this money will not go only in one actor. So I think the more people are bridging TradFi and DeFi, the most um, it's good, for DeFi, because it will come more people that will be exposed to more DeFi services, and will also create some real services for people that are using crypto. And this is the most important things, because all my capitals are in crypto mainly, and I really want a world where you can spend whenever you want your crypto, do whatever you want with your crypto. And so for that, you need to have actors like PayPal that are bridging this DeFi layer, crypto layer, to the initial model, initial services, payment services.
So yeah, I didn't know you were going to say you have most of your net worth in crypto, especially as a former politician.
Yeah,
That's huge.
yeah, it's
um,
strange, it's strange, but yeah, most of my wealth is in crypto, and I will never change that, because it's not that I don't trust banks. I think I'm trusting banks and so on. But clearly, I really want to control my own sovereignty, and I don't rely on someone else that will control what I can do with my money, and so on. And so it's also about freedom and liberty. And so it was very important for me to, yeah, if you are in crypto, you need to be skin in the game in certain sense, and you need to believe of crypto. And I'm a true believer since the beginning. And so I'm not rich in certain sense, because I sometimes I invest every time in the top of the market, but clearly, yeah, a huge part of my wealth is in crypto. Yeah.
well, what are you holding? I'm just super curious. Is like Bitcoin, or if you're comfortable?
I'm a lot exposed to
Just
Atom,
curious.
and so it's a running joke with my co-founders, because Atom is in that sense
Interesting.
is flat these days. But yeah, I'm exposed to ETH, Bitcoin, Atom ecosystem, yeah, and also altcoin, but mainly these three.
Yeah, I hope some atom as well. Hopefully, our back can can go after this
Yeah,
cycle.
sure. I
Um,
have no doubt on
Cosmos
that.
interesting.
Yeah, Cosmos
Cool,
is very
cool.
interesting. They are expanding. IBC very is powerful, and all the security layer also. So I have no doubt on that. I think this ecosystem is quite strong. Uh, it's not based on full marketing, and so yeah, I trust this system, and this ecosystem, and I think on the long term, it will be. Yeah, the valuation of this system will be um, updated, because for the moment I think it's a little bit less under the real price of what is built by Cosmos. Yeah.
Yeah, I can tell like connecting the dots that usual is going to have a lot of interactions with the IBC
Yeah,
ecosystem.
sure, absolutely. Yeah, to be cross-chain is very important for us. Um, the main question is how you are handling the distribution on various chain. So it's a technical challenge, and it's quite complicated to know exchange information between various chain. But after that, yeah, I'm totally convinced that we need to be on various layer two. We have a lot of
Mhm.
people that support us, like Arbitrum, like Mode, like Movement, like Mental, Starknet, and so on. So these guys are investors in usual, and so we will work with them to spread the liquidity, to create a USD zero natively on the chain, because I think it's quite important at the end to offer also some services with a lowest fees possible, because on the long term, if you want to be able to be a mean of payment, you need to be be sent with lowest fees possible.
Yeah, why do you call it USD zero? What is the story behind that?
That's a good question. USD zero, the zero is because we are close to M0, so central money. So it's a joke. Like I said before, we don't want to expose to bank deposit because banks are not fully collateralized. They can fail because a part of the balance sheet are invested in some non-liquid asset, and so they rely just on the prudential ratio of central banks. And so we really wanted to have something that is trustable and very safe. And so having a stablecoin that is collateralized by T-bills, it's like to be close like central money, and so M0. And because
Mm-hmm.
you don't have access to central bank accounts, to Fed accounts, but you have something that is owned by banks. So T-bills are owned by banks. Central banks have a lot of bonds, state bonds. So clearly, it's like to be close to M0, so USD zero.
Got it. So for the audience who are familiar with like macroeconomic, like M0 is the dollars that are held by the banks, and then M1 is kind of like more spread out, but
Absolutely.
also have higher
Yeah.
risk. And there's M2 that kind of just higher attitude. Okay.
Absolutely. Very right.
Interesting. Well, thanks so much for coming, Pierre.
No, it's
Do you have
a
any
real
final
pleasure.
message or anything else you wanna share with us?
But what I can say is take a look to usual. You will see the product is great. The public release will happen at the end of June. And so if you are interested to build this with us, to create a new model that share the value generated to the user, like the ethos of crypto, but let's join usual.
Awesome. Well, thank you so much.
Thank you, Cheng.